I want to thank my colleague Deputy McGrath for giving us the opportunity, 5 months actually, nearly to the day, since we last discussed credit unions here in the House. And actually, ironically enough, Chair, you were in the chair the same evening. And as I look at the government counter motion this evening, there's some progress, but some of the counter motion is absolutely contradictory. And every single government TD that comes in here and that's going to inevitably pat the credit union movement on the head, tell them they're great guys and girls and they're wonderful and we love you, should know what they're actually voting for tomorrow night. They're voting, the Minister is very clear in his counter-motion that it is the Minister for Finance's intention to commence the remaining sections of the 2012 Act on 1st December. So no matter how many concerns you express about CP88, you're voting to actually endorse its implementation. You're also voting to endorse the contradiction that is that government policy around credit unions. Because yes, you support it and yes, you come in with fine and soothing words about how good it is. But in this motion, you're actually contradicting yourself. So one line in the motion is the Minister for Finance recognises the concerns of the credit union movement in relation to the saving limit of €100,000, but yet commits to introduce the regulation in another line that's going to copper fasten that. The Minister for Finance also notes that the setting of the savings limit is a matter for the Registrar of Credit Unions. Buck passed straight away. But the Register of the Credit Unions must be answerable to somebody, so presumably they're answerable to the Central Bank of Ireland. The Central Bank, and a line in this motion, has informed the Minister for Finance that it has invited a number of interested parties in the credit union sector to participate in focused dialogue in November 2015 with a view to gaining a better understanding of how credit unions want to develop their business model and to identify changes that may be required to the framework to facilitate prudent development. Well, hello and welcome to the party, Central Bank of Ireland. 2015, you finally get around to having a discussion and a dialogue with the credit union movement as to where it wants to go and as to where it sees itself going. And that is the frustration, Minister, that you have a central bank and you have a regulator that either doesn't get it, that either doesn't want to get it, or, at its very worst, wants to strangle the growth of a movement with so much to offer, with so much potential and with so much interest, not in the country, but in individual communities and in individual peoples, and giving them a better chance, giving them a better opportunity. And yes, Deputy Maloney is right, and there were figures published today about how much people are going to spend on Christmas. And this is the time of year where people will borrow to spend Christmas, to give their families the best Christmas possible, and those that have the ability and the opportunity will do that from their credit union. But many won't. Many won't be able to because rules and silly rules are strangling credit unions, particularly in large urban areas, to make those small loans, and they will go to the hands of money lenders on 300%, 400% and 500% who don't adhere to any code of conduct or who never engage in a structured dialogue with the Central Bank of Ireland because they don't want to, they don't have to, because we have something strangling the very growth. Can you imagine, in the context of the collapse of the banking sector and the collapse of trust, if somebody had said we have 2.89 million people in this country who between them have 11 billion in savings, 3.5 billion of that out in loan, with 13 billion in assets, and they're spread into 342 branches that are affiliated to the League and a few others right around the country, and they want to assist in the financial recovery of the country. In 2008 and 2009, we would have gone with arms open to them. But this government, the central bank and this regulator seems to want to restrict it and to push them back, and to actually push back the potential of that institution, push back the potential of that movement, push back the ambition of that movement. When this political system and when this House struggled to come up with an idea and a solution to the housing crisis that is engulfing this movement, the Irish League of Credit Unions came to the table with a proposal, with money, with a willingness to lend that money in the cooperative spirit, the metal spirit on which it is founded. It put its money where its mouth is instead of just talking about it. And yet, Minister Kelly is talking to them, is engaging with them. There's very little sense of urgency, the urgency that the credit union movement responded to homelessness and the urgency to which they respond to community development all over the country isn't replicated within either the regulatory or the political system. And tonight and tomorrow night are the chance for this political system to actually stand up and say, we're not just going to give you soft, soothing words, because nobody does that better than Minister Noonan. And what he will do when he presumably comes in, he will take the credit union movement All 3 million members, put them sitting in his lap and tell them, you're great, I love you, and we all love you. And Barney-like, he'll hug them, but he'll send them out the door and he'll still put in CP88 and will further restrict their growth. Yes, 99%, Minister, of members may not be affected by the 100,000 limit, but if you get a redundancy payment, if you sell a house, if you win the lotto, you will have a requirement and you should have the ability to use your local credit union. And the notion that a credit union should go cap in hand to the central bank to apply for special permission, this is a government that's supposed to be reducing regulation, that's supposed to be making it easier for SMEs to do business. And here you are, putting another regulation in the way of the most local of SMEs and the most well-founded and grounded of SMEs, our local credit union. You know, there's so many things that we are avoiding and we should be engaging with credit union. SME lending. I spoke in June of Microfinance Ireland, an organisation that has finally got its stuff together, that is doing some really good stuff, but only in the last 12 months. The credit union is ideally situated to position and to partner with Microfinance Ireland in terms of loans for SMEs, in terms of loans for companies who cannot get funding from Leader or from Microfinance Ireland because of displacement rules and that. If we gave the credit union movement a role in supporting local companies, small companies, companies who will never export, who aren't into IT or technology, they will provide a very crucial role. They will protect jobs, they would enhance jobs. We've spoken about the alternative and the trust that we put in our credit unions in relation to money lenders. We have spoken previously in June about the investment the credit union movement have made in their staff, making them do the most up-to-date courses possible in financial management, in prudential management and in legal things. They are briefed, they know their stuff, they are more on top of their brief than many bank officials, or dare I suggest many people who seek to regulate them there this evening. You won't hear of the credit union replacing every single counter in their various branches on a Friday night to open on Monday with one cash counter and a load of computers and a load of ATMs, and when computer says no, the one desk has a queue going out the door. You won't hear credit unions shutting down branches with minimal or no notice, or telling older citizens that they can talk to the computer, they can ring the call centre, or they can bank online when there's no broadband, never mind the ability to actually do anything online. You won't hear credit unions upping banking fees by 240% in the manner in which all of our established banks have done for small businesses in the last number of years. You won't hear credit unions telling people what day you can lodge coin and what days you can't, even if that does require you to keep cash on your premises, particularly at a time of security. Credit unions, Minister, are the metal. They're based, grounded and rooted in 346 communities across the country. We want to leave them there. We want to strengthen those roots. And instead of patting them on the back, stand back. Stand back. And the difference, Calleary, tonight between November and June is not just months, and it's not just the temperature. It is that you have no time left. You can decide on the basis of this motion not to proceed. You can decide on the fact that there's an election coming, that maybe something as substantial and as important as this should really be done by a government with a new mandate.